Good morning, guys. Welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Wednesday morning, and the cues aren't looking all that encouraging. We have the important Fed decision that we are awaiting, and it will be coming out tonight. And expectations are that the Fed will cut rates by 25 basis points. But it's the future rate trajectory that the street will be watching out for from Jerome Powell's, press conference. Whether or not the Fed will press on with rate cuts, or will there be a pause after this particular rate cut, that's something that the street will be watching out for, and traders and investors will be looking for clues to that effect from Jerome Powell's speech. Lots to watch out for over the next 40 minutes or so. There will be 3 new listings on the Lal Street today. Mobikwik, which saw a very stellar kind of response for its IPO, 120 times subscription vis-a-vis the shares on offer. That's the kind of demand that Mobikwik saw, and could list at a good premium. Aside of that, you have Vishal, Mart as well, and Sai Life Sciences. So 3 new listings today. Lots happening on in the primary market that has been buzzing, so to say. But next 30 minutes we'll be also taking up all your stock related queries, so keep them coming in on a live feed, and we'll try and get them addressed by our experts. We'll also be getting you a big market voice as to where we are headed from here after yesterday's correction, after the recent correction that we've seen in the market, and what are the themes to really watch out for in the new year. So lots lined up. Don't go anywhere. Stay tuned to us, or stay with us over the next 40 minutes or so. Before we do all that, let's take a quick look at the headlines. Wall Street ends lower ahead of tonight's Fed policy decision. The Dow logs a 9-day slump, its longest losing streak since 1978. Meanwhile, Asian markets open mixed, while the GIFT Nifty is suggesting more downside for our markets. In the pre-open, if you look at the indices, they are trading with mild cuts. Crude prices slip with Brent trading around that $73 a barrel mark on renewed demand concerns. Meanwhile, gold prices fall as well on stronger dollar and rising treasury yields. Government is likely to impose a temporary duty of up to 25% on steel imports. This will be in its debut today. Well, on that note, let us quickly look at the cues for trade. Just about 3 minutes to go for the markets to open. Yesterday we slumped to a 2-week low with the Nifty ending below that 24,350 mark, but we did manage to hold above that 24,314 level, which happens to be the 20 DMA level. The Sensex also slumped 1,000 points. The mid-cap weakness kept market breadth in favor of declines. Remember, broader end of the markets had been holding up so far, but yesterday both the Nifty mid and small cap indices also succumbed to selling pressure. 49 out of 50 Nifty stocks ended lower, barring Cipla. All the stocks were in the red, were deep in the red actually. If you look at the realty stocks, they managed to move higher, although the headline index was lower, but some of the stocks in the realty on the realty index managed to eke out gains in a weak market. Some of the other stocks that were in focus were the likes of Suzlon Energy, saw healthy gains in a weak market. Fertilizer stocks were also buzzing on reports of a rise in de-ammonia phosphate prices. Quest Corp was another one that managed to buck the trend, up 8% on the back of a positive brokerage report. Antique Stock Broking, initiated coverage with a buy rating on the stock, so that stock was up. The put call ratio dropped to 0.65 vis-a-vis 0.9 in the previous session. New stocks that have been added in the FNO ban list are the likes of Bandhan Bank, Chambal Fertilizer, PVR Inox. Is back in FNO ban. Yesterday it came out of it and saw good traction, and today again it's in the FNO ban. Still in FNO ban are stocks like Granules India, Hindustan Copper, Manappuram Finance, Nalco, RBL Bank as well as SAIL. Important to note the FII sell figure, 6,400 crore rupee worth of stocks sold in the cash market. So that will be a bit of a dampener, because we were seeing buying interest from FIIs so far in the month of December. Domestic investors were net buyers to the tune of 2,700 crore rupees. Just about a minute to go for the market to open, but let me quickly bring on board Rajesh Palviya of Axis Securities to understand what we should be expecting in trade today. Rajesh, just about a few seconds to, in fact, no, 3 minutes to go for the markets to open. How are you expecting the Nifty to move here on, given the fact that, we are just above that 20 DMA level? Once that breaks, what is the kind of level you'll be watching out for? Because the recent swing low was 24,180 that was made on Friday. Do you expect a retest of those levels?
that is, now giving us a sign of that, we may again, retest the previous swing low of 24,180. So possible down move can extend further if we remains below to 24,400, because if we look at the put based concentration, which was placed at around 24,500, 24,400, and that has, taken out by the market in the previous day. And across the board, selling was there. Most of the large cap stocks have witnessed the supply pressure. So none of the leadership is there in terms of index to hold on. So we believe that, till we are trading below to 24,400, there is a possibility of 24,200 to 24,180 level to, again retest on the downside. Even on the bank nifty, we have broken the 53,000 level, which was the major support area. And again, if we remains below to 53,000 level for bank nifty also, here also there is a possibility that, there could be further more slide towards 52,500. That's the next level where we are focusing for the bank nifty. So both indices are in, looking slightly weaker at this juncture. Maybe till we are not crossing about 24,600, I think trend is likely to remain on the sell on rise kind of structure.
All right, sell on rise kind of structure. Before the market open, I would like to understand what would you be keeping on your radar, in terms of stocks for the rest of the week. Any recommendations for viewers in this market?
So, two stocks where we are focusing. First one is United Sprit. Most of the liquor stocks have done well in last couple of days, and United Sprit managed to give breakout of its consolidation range. So, looking at the overall structure, we believe that, here could be a further more follow-up buying action. 1600 to 1620 would be the next target for the stock. So, one can focus on United Sprit to buy at this juncture. One mid-cap stock that we like at this juncture, that is Jyoti CNC. This stock is now approaching towards its all-time high trajectory. The way stock has closed above 1400 mark, I think if it's sustained above 1400, there is a possibility of 1500 to 1530 kind of level in Jyoti CNC. So here also one can look for, buying action, or one can deploy long trades.
All right, those were the stocks to keep on your radar. Jyoti CNC, remember yesterday saw a 10% up move in a weak market. But the first ticks are coming in. We have the opening bell here, 24,300. We are just about hovering around that level. In fact, we are looking to defend that level. As we have opened around that zone. We've broken below that 20 DMA level of 24,314, 25 points down on the Nifty, 80,600 on the Sensex, just about 70 points down. The mid cap index, was trying to edge back into the green, but so far hasn't really succeeded. Very flat at the current juncture, but trading with a negative bias. Let's take a look at some of the other sectors then and see how they are faring in early trade. You have some of the sectors like the Nifty Bank Index, that has seen another 0.3% kind of a cut. So 52,650, we are round about that level, another 170 point cut on the Nifty Bank Index. Let me just take you through the 50 DMA level on the Nifty Bank Index. That's at 52,576. That's the 20 DMA level on the Nifty Bank Index. We are holding on to that level as of now, managing to stay above that 52,600 mark. But let's see, that will be a crucial level on the downside to watch out for on the Nifty Bank Index. Aside of that, looking at some of the other sectors, as I mentioned, let's take a look at the auto pack, because the recent Vahan data is hinting at weakness in the two-wheeler sales as well. So auto pack down 0.4%. You have IT that's managing to hold out. Even FMCG trading with a positive bias, 0.2% kind of an uptick there on the FMCG pack. Pharma, that's taking the lead as of now, 0.6% kind of a gain on that index. If you look at the private bank, PSU bank indices, they are in the red. Metals pack trading in the red. Media pack that has seen good traction over the last few sessions has also opened in the red, 0.5% downtick there. In terms of individual movers, let's see which are the stocks that are emerging as the top laggards today. Tata Motors down 1.5%. You have Power Grid, Maruti, Bajaj Auto, L&T. So some of these auto names under pressure. Even some of the PSU names like Coal India, BEL, are under pressure. Ultratech Cement is under pressure, and so is Adani Enterprises. From the banking names, you have the likes of IndusInd Bank, ICICI Bank, SBI. These are some of the even Kotak Bank for that matter, seeing selling pressure today. On the flip side, what's holding out is Shriram Finance, that has seen a few sessions of weakness, that has managed to bounce back, and it is among the top Nifty gainers. Pharma doing well today. So, Sun Pharma, Dr. Reddy's, Tipla extending gains from yesterday. So, pharma names doing well, and some of the tech names like HCL Tech Mahindra or TCS are also in the green, and also the FMCG names like ITC, HUL are among gainers, even Tata Consumer for that matter. But talking about Bharti Airtel, Rajesh, particularly this stock, off late it had come under some bit of selling pressure, but today it has managed to come back into the green. Is it a buy on dip kind of a stock now, Bharti Airtel, and what is the next level to watch out for here?
So, Nandita, the overall structure for Bharti Airtel is bullish on the long-term chart. Yes, some consolidation is happening since last 2-3 months. Overall structure is bullish, and now stock is almost trading near to its important support area of upsloping channel on a monthly chart. So I think if stock sustain above 1580, 1590 zone, I think trend is likely to remain on the bullish side for the near-term perspective also. So those who wants to deploy some long trade for trading point of view, they can buy this current market price as a buying opportunity. Keep stop loss of 1590. On the higher side, once stock manages to cross above 1645, I think this stock has potential to move higher towards 1700 level also. So I think yes, one can buy Bharti Airtel in any minor correction if you get in this kind of market.
Okay, that's the view. Bharti Airtel buy on correction. But what about Ambuja Cements? Its board has approved merger with Sanghi Industries and Penna Cement as well. Of course, merger is subject to statutory and regulatory approvals, including NCLT. The share swap ratio has also been announced. Would you be taking a bet on some of these cement names? And if yes, would you prefer an Ultratech, or do you think Ambuja is looking better on the charts?
Ambuja is also looking attractive on chart since last couple of days. Stock is consolidating in a very tight range, but looking at the short-term structure, stock is holding above its near-term, short-term breakout level. I think any follow-up buying actions comes above 585. I think then stock may have potential to move higher towards 620, 630 kind of level also. So some consolidation is happening in Ambuja Cement. So those who wants to buy and accumulate can deploy some long trade with stop loss of 555. Again, in the cement pack, I think some mid-cap cement where we are focusing at this juncture, which is JK Cement, is looking attractive. The way stock has moved up in last couple of weeks, I think here there is a chance that stock may attempt to give breakout of its previous swing high of September 2024. And I think if that happens, this stock has potential to move higher towards 4800 level also. So JK Cement is also looking attractive, though there is some pressure at higher level. But I think in decline one can buy. 4600 is the stop loss to buy the stock. On the higher side, 4800 where we are focusing in the near term to short term perspective.
All right, that's the view on the cement pack. But from cement, I would like to get in your thoughts on liquor stocks. Some of them have been in high spirits, and there's another money control exclusive wherein we've reported that Tilak Nagar Industries and In-Brew Beverages, these are some of the suitors that are likely to enter the final round of the ongoing sale process of Imperial Blue Whiskey. How is Tilak Nagar Industries looking to you right now? And within the liquor pack, which stock is looking the most attractive on charts? You have United Spirits, with Tilak Nagar Industries, even United Breweries for that matter. Anything that you would take a bet on?
I think most of the liquor stocks are showing traction, and I think most of the stocks are ready for showing a good uptick in going forward. So I think UBL is also looking promising, and Tilak Nagar Industry is also showing traction after a brief correction. I think Tilak Nagar Industry, if manages to cross over 425, I think here there is a chances that stock can scale up to the level of 460 also. So at this juncture, those who have already bought can hold the position with stop loss of 390. United Breweries is also looking promising. The way stock is trading about 2000 mark, I think if it's sustained about 2000, there is a chance that this stock may also attempt to move further higher towards 2060 to 2100 kind of level. So here also one can focus in the near term trading perspective with stop loss of 1980.
All right, that's the view on the liquor pack, including the likes of Tilak Nagar Industries. What about realty? In a falling market as well, the realty stocks have managed to hold their ground. Yesterday, on the headline index of headline realty index, we saw losses, but some of the stocks really managed to show good traction, defying the market, the overall market trend. And of course, this morning as well, we have a report coming in on DLF, wherein CLSA has an outperform call and the target price has been raised to 975 rupees. Currently, it's at somewhere around 869 or so. How are you looking at these stocks from a risk reward standpoint? Do you think is it's justified to buy at these levels, or buy on dips should be the strategy here as well?
So we have seen a very strong run up in most of the real estate stocks, especially Mumbai-based real estate companies have done well in last couple of days. Oberoi Realty is looking very promising. The way stock is now scaled towards its new all-time high trajectory. I think here there is a potential for to continue further upside. Possible upside for Oberoi Realty we can expect towards uh, 2350 to 2400 kind of level in a short term perspective. So one can look to buy this stock in any minor correction with stop loss of 20 to 30. Again, Loda Macrotech developer is also looking promising. I think here also there is a chance that stock may attempt to cross its previous all-time trajectory. So Lodha is also looking promising at this juncture. Buy on dip should be your strategy till stock is holding above 1420 mark. I think any minor dip should be used as a buying opportunity in Lodha also. And another real estate
Hmm.
stock like Prestige State is also looking bullish. So I think most of the real estate stocks have shown good traction in last couple of week, and I think trend is likely to remain on the bullish side for some more time once markets stabilize and once the broader market start showing some recovery. So I think real estate would be a sector where we are focusing, and here we can see some outperformance to continue in the near term to short term basis.
Okay, that's the view on the realty pack. But let's shift focus and take up some of the queries that have been trickling in this morning. Dhyaneshwaran wants to know your thoughts on a Coal India. For a 1 to 2 year perspective, he wants to know whether he can buy on dips. Uh, last few months, in fact, of late, PSU stocks had seen a fair bit of correction. Is it a buy on dip opportunity, especially for the likes of Coal India, and even some of the defense names for that matter? Renewed traction in some of the defense names, but still, would PSU feature on your buy list now, and especially Coal India? What kind of level should one work with a 1 to 2 year perspective?
See, correct. Significant correction has been done in Coal India. Almost this is the fifth consecutive month where stock is making lower high low formation. So that clearly showing us that it's a sustained supply pressure in this stock. And in this process, I think stock has corrected from the level of 540 all the way to now 400 level. But still, there is no sign of recovery in the stock. And looking at the near-term, short-term structure, we believe further more pain would be there in Coal India. So I think I would avoid at this juncture for Coal India. Let the stock to settle down at certain level. And once a stock will show some sign of bottoming out, then only I'll suggest to deploy some trade in Coal India as horizon is for long term, but I think let the stock to settle down. Maybe in this correction, stock may correct further towards 375, 360 kind of zone. I think at that level, I think one should review it, and if it's hold those level, then maybe some staggered buying can be initiated. But at this juncture, I would avoid at this juncture for Coal India.
Hmm. Okay, Coal India is an avoid, but since we are talking about PSU names, what about Bharat Dynamics? We have a query coming in from Shweta. She wants to know. She wants to know what to do with the stock. She has bought shares at 1446 rupees a piece. She wants to know if she should wait or exit. Her time horizon is 6 months. Uh, is it? And she also wants to know if it's a good idea to exit and buy Bharat Electronics at current price. What would you advise her to do?
So just to give you an update, we have come out with a thematic report on defense sector based on the technicals, and our preferred choice in this pack is Mazgaon Dock, Bharat Dynamics, Bharat Electronics, as well as uh, data patterns. So these all stocks we have identified based on certain patterns which we are observing on on the after this correction move. So I think Bharat Dynamics is also showing sign of recovery. If she has a horizon of 6 months, I think she may get again, the buying rate. The way stock has moved up from the recent low, I think there is a possibility that, most of the defense stocks are showing traction in terms of buying, and we believe that, here we could see a rally to continue further as market is volatile in nature. That's why we are seeing some halt in this rally. But BDL, if it's sustain about 12 20 level, I think near term perspective also the trend is remain on the bullish side. 1400 would be the next target for BDL. Again, from the same pack, Majgaon Dock is also our preferred choice, and we believe that, here there is a possibility that, target would be around 5400 to 5450 on the higher side. So here also one can look to buy this stock. Data pattern is also our preferred choice from this pack. So I think these three, four stocks are looking attractive from the defense pack. I think one should hold the position. There is a sign of, continuity of this reversal trade, and we may see another 5 to 10% kind of up move in short to medium term basis.
All right, that's the view. Hope that answers your query, Shweta. The next query is coming in from Satya CK. Wants to know your short to medium term outlook on Reddington. He's bought it around 160. I think that also happens to be the 25th October low, around about 160 levels. He wants to know if he should be booking profits or hold for a target of 300. As I was mentioning, the stock has seen a very good recovery from October lows, right? October 25th, it hit 160 or thereabouts. Since then, the stock is up 30%. Rajesh, should he hold on and wait for 300 level, or what should he really do?
So on a weekly chart, stock managed to give breakout of its falling trend line. So that clearly shows that, yes, some trend reversal has been witnessed on the stock. Yes, there is a possibility that, stock may attempt to move higher towards 235 to 40 zone. That's the previous swing high for the stock. I think their stock may face some challenges to cross, but I think if it's able to take out this 235 to 40, so Reddington has potential to continue its upward momentum. Series of higher top, higher bottom formation is there on the daily, weekly time frame, and overall long-term structure is bullish. So yes, the stock may attempt to move to 270, 300 kind of level also. So I think if horizon is for 6 to 12-month kind of time frame, so I think yes, we may get a chance to get that trade of 270 to 300 kind of level.
Okay, that's the view. If you have a longer time horizon, perhaps you could, see that level of 300 on the stock. But, there's a query on a realty stock. We've already discussed realty stocks. Perhaps you can rewind the feed a bit and check out Rajesh's answer on that. But the next query is coming in from Maheshwar Bhanu. Wants to know your thoughts on chemical stocks like Balaji Amines, Clean Science, Galaxy Surfactant, Pidilite. He wants to know if these stocks are expected to see a resurgence anytime soon, and if yes, which of the chemical stocks should he look at with a 1 to 2 year time horizon. Any attempts at a rebound, they have been futile really if you look at some of these chemical names. But chartically, has anything caught your attention?
See, as such, most of the chemical stocks are still struggling to cross their, major supply zone. Some recovery was there from a recent low, but still, I think it may take time to, give breakout on the weekly as well as on the monthly chart. So I think till this breakout is absent, I think we may see some consolidation to remain in the most of the chemical stocks, be it Navin Fluorine, Balaji Amine, Galaxy Surfactants. I think all these stocks are having a similar kind of structure. If you describe on Balaji Amine, I think after a correction, stock is showing some sign of recovery, but in this recovery, still stock not able to cross 50-day, 20-day moving average. So I think until the stock not crosses about 2100 level, it may remain in the consolidation. On the downside. 1950 would be the lower band for the consolidation. On the higher side, 2050. So I think here there is a possibility of consolidation to continue further. Even for Navin Fluorine, I think a higher side 3600 is the major challenging level. Until these levels are not taken out, this stock may also remain in the consolidation. So I think still most of the chemical
Hmm.
stocks are still in the consolidation, and we believe that some more time will require to give breakout. So those who have patience for holding for next 3 to 6 months, they can buy in a staggered manner, not in a one go.
All right, that's the view. Hope that answers your query, Maheshwar. The next query is coming in from Pankaj Kajalia. He wants to know your thoughts on a Naukri. He has 100 shares. I think he's not mentioned the buy price, but he has 100 shares. Naukri has seen good traction. If you look at the last 1 month chart, has given a good 16 to 17% kind of returns. Is this a breakout move expected to stay intact, or how do you look at the charts, and how does it compare with the Quest Corp that has also, of course, seen very good traction? Yesterday itself, the stock was up in a weak market.
Naukri is clearly in uptrend, and the way stock is moving in upsloping channel on weekly chart, that clearly shows that there is a sustained buying action is taking place in this stock, and very strong buying action across all time frame. So I think one can hold on the position. Those who have already bought the stock at lower level, I think 8700 is the important level to watch for on the downside till the stock not crosses below 8700 level. I think trend is likely to exhibit on the bullish side, and possible up move can extend, and we may see a level of 9400 to 500 also in the continuation of this up move. Quest Corp, again, showing a sign of recovery. Stock is now penetrating to its last 4 5 week consolidation range. I think any breakout happens above 750, 740 zone. I think here also we could see good traction towards 780 to 800. So Quest Corp, one can keep on their buying list at this juncture. 685 would be the stop loss to buy Quest Corp also.
Hmm. Okay, that's the view on Info Edge as well as Quest Corp. But a couple of queries coming in from the realty space. No, I beg your pardon. The railway space. Titagar is one. We have a query on that, and we have a query on IRCTC as well from Alex. Some of the railway stocks are witnessing a renewed buying interest, right? We also had a couple of order wins that have kept the stocks active. Would you look at the likes of IRCTC and Titagar within the pack now?
See, we have seen a recovery in most of the railway stocks in last couple of weeks, but again, looking at the broader market supply pressure, some supply or some profit taking again witness in most of the railway stocks. But looking at the structure, I think IRCTC, if it crosses above 835, 840 level, then there would be some follow-up buying action we could see in this stock, and then we may see a rally towards 860 to 880 kind of level. So IRCTC, those who wants to buy on breakout, wait for breakout of 835, 840, then buy it. On the downside, the major support for this recovery is placed at around 805. Again, some stocks like
Hmm.
IRFC is also, showing some sign of recovery from the after the correction. I think if IRFC manages to cross above 160 level, here also we could see good rally towards 175 to 180 kind of zone. So one can focus on IRFC also. Those who wants to buy above breakout, wait for 160 breakout and then buy it. Those who wants to buy and accumulate can accumulate at this current level also with stop loss of 150.
All right, that's the view on the railway stocks, but I'm afraid, we'll have to call time on this query session then. I wish we had more time to take up more queries, but if not today, we'll take up tomorrow. Don't worry. Keep them coming in although. Rajesh, with that, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Always a pleasure, and I hope to see you again next week.
Yeah, thank you.
Well, thanks a lot then. Let's shift focus to the market once, because the Sensex has just about managed to edge back into the green. We have flattened out. We are off the opening lows, and the indices are trying to edge back into the green. Although the mid cap index is still in the red, and the Nifty has managed to edge up back above that 20 DMA level of 24,000. 314. So that's some bit of a reprieve after yesterday's sell-off. But on that note, let me bring on board the big market voice that I had promised at the start of the show, Andrew Holland, who's joining us from Avendus Capital Public Markets Alternative Strategies. Andrew, great to have you on the show here. First of all, let's talk about the big Q then. 25 basis point Fed rate cut seems to have been factored in by the market. But here on, what are your expectations? Do you expect a prolonged pause here on? Are you expecting a more shallow rate cut cycle for 2025? If yes, have the markets really baked that in?
Good morning, Nandita, and thank you as always for the opportunity. You're right that the Fed has, or the expectations of the Fed rate cut of 25 basis points is pretty much baked in. I think now all eyes are what the statement is going to be. Is it going to be a little bit more hawkish? The data from the economy is still strong, but inflation is still elevated. And with President-elect Trump taking office in late January, will he kind of be a little bit more hawkish and say that rate cuts may not be as quick as we've seen in the recent past? Is that baked in? I don't think so yet, although bond yields have moved up in the US. But I think I don't think the market's expecting too hawkish a statement. But I think that would be something that the market would be a little bit less enthusiastic about, and that's what we've been seeing. I mean, even though you've seen the indices in the US, it's mainly been driven by the tech side of the equation rather than the Dow Industrials and the S&P. So I think the market's saying it might not be as good, and therefore a lot of the great things about America, which everyone's talking about, is probably starting to be priced in even before President Trump elect takes office.
Now, that was my next question to you, really, about the US market. Of course, we are approaching Christmas, and it's like, a sea of red across the screen. What we would like to see is the other color that's associated with Christmas, which is green. But given the fact that Dow has seen its biggest losing streak in nearly 5 decades, and on the other hand, we've seen NASDAQ hitting fresh highs. And of course, as you mentioned, the rally in the US has largely been led by technology firms, and that's evident in how the NASDAQ has been moving. But here on in 2025, would you, temper your expectations from US equities, or would you say that there could be a lot of sector rotation and the rally could broaden out a bit? Because, Trump's policies would be good for sectors like BFSI. So how are you approaching the US markets now?
Yeah, so the big news for the US is obviously a tax rate cut, from whatever it is, 25% to towards 15%. And that's great it's a great earnings boost, across the board, for companies. So, that would be, the first part of the good news coming through. Obviously, we have to wait and see what tariffs is going to bring along, if any, to kind of quell the imports quell the imports into the US. But that could be inflationary too. So I think the market's going on the two factors. One, earnings are going to be increased. And two, there's probably going to be a lot more M&A activity going forward, given that the tax cuts could promote acquisitions in the US. So I think that's what's going to propel the US market towards his election in terms of being taken over on the 20th of January. But thereafter, it's pretty much baked in, right? I mean, the valuations are very high, so there's nothing that can go wrong. So I'm not on that side of the equation, Andy, to where it's like everything is going to be so good that there won't be some shocks along the way. So I'm going nervously into 2025 because I can see that anyone you talk to is, I've got to buy the US, I've got to buy the US. And valuations, we talk about the valuations here, but the valuations there are even higher.
Right. What about India? Would you be nervous going into 2025 with respect to India as well? Because there are quite a few headwinds. Dollar strength, pulling flows out of India, and it's the not the China factor anymore. It's money flowing back into US. Growth-wise, things have slowed down a bit. No excitement on the earnings front. We've again come back into the correction, zone or trend. How would you really view 2025 in terms of an opportunity? Would you say, one should really look at buying now, or wait it out, be on the sidelines, let the correction, happen, and then look at the market?
So, Nandita, I'm very much on the second part of what you said, which is sit on the sidelines. Let's just go through a few of those. Obviously, the President-elect Trump coming in is, we should wait for that. Let's see what those policies might be, and how it would affect emerging markets in particular. That's the first point. I think the second point is you've got two things that are probably more positive for India, which is the RBI, doing a interest rate cut in February of 2025, and of course we have the budget beforehand, and of course there's always excitement around that. So you might have that kind of little rally towards those kind of actions in February, but the problem before then is that the GDP growth is slowing very, very rapidly. I know the RBI is 6.8%, but we're thinking more like 6% GDP growth for this year. So unless the government start spending a lot of money, which doesn't seem to be happening, earnings downgrades, I'm afraid, are going to start coming thick and fast in January, when we start to hear about third quarter earnings.
True. What about some of the sectors like autos? The latest festive sales data, data isn't rather encouraging, and it's been disappointing on both the two-wheelers and four-wheeler segments, right? Till now, two-wheelers were faring well, but the latest data that I went through, last evening, it wasn't really encouraging. So, is it time to rotate out of this sector? Do you think the upside that we had seen, especially in the two-wheeler basket, has run out of fuel for now?
Yeah, I think so. I think the auto sector is under immense pressure with with excess kind of vehicles out there, but also the competition is just heating up, and I think margins are going to be tremendously under pressure over the next one quarter. But this is just not the auto sector, and these are across the board, right? We saw in the last earnings results, it was volume or revenue growth which was slowing, but worst case was that margins were also coming off as well. That's something you can't reverse so quickly. So I think, if anything, if anyone's trying to get volumes, it's going to be at the expense of price, and therefore prices are going to lead to lower revenues and obviously lower margins. And I think that's the case across many different industries, not just autos. And that's why I'm a little bit skeptical. So, a strategy of just sitting on the sidelines with some cash for a couple of months is not a bad idea. You'll get 6-7% returns in fixed income. It's not a bad place to be, right?
Right. I also want to get in your thought on the quick commerce space, because all the action seems to be in this space, right? With the entry of Swiggy, and now pretty soon we'll see Zepto also making its stock market debut. Zomato, of course, has been the leader in the pack, but there is a lot of catch up that Swiggy has to do, and the street is also taking note of the valuation discount that Swiggy is available at. Your thoughts as to how much runway of growth is there for someone like, or some stock like, or a company like Swiggy for that matter, and which one do you prefer? Do you see more headway for growth for Zomato?
Listen, I think there's just huge growth for these companies. I mean, if we step back, Nandita, we talked about this a year or so ago. At that time, it was more about obviously Zomato was the only one listed at that point, was really talking about, how do they get cash flow positive, then get to profitability. And I think all of that has played out very well for them. And I think the market's now realizing, when you look at FMCG companies and the traditional kind of stores, that this is a trend which is not moving away. I mean, we all buy. Even I traditionally I wouldn't do that, but even I'm kind of using these platforms. So I think it's a momentum that's not going to go away, and if anything, it's going to accelerate going forward. So the great trade has been short FMCG and buy the new age technology stocks, and I think that's going to play out for at least another 6 to 9 months, because the trend is there, and it's going to be a long-term trend which isn't going to change. So I think there's room for everyone to grow in this. So it's a bit like the IT sector, so many years ago, right? With Infosys, Wipro, TCS. I mean, the winners will change over the years, but the trend for the whole industry is so positive that it's like a rising tide, right? Everyone's going to go up with it.
Lastly, Andrew, which are the sectors that one should really look at, in terms of portfolio rejig? You mentioned that, it won't be a bad idea to sit on the sidelines, but once people do start deploying their money, which sector would you look at, or where would you look at in terms of value?
So whether it's in terms of value, Nandita, is always a difficult one at the moment, given where valuations are. But I think I always look at the long-term kind of trends which will fire sectors ahead, and therefore companies. So electronic manufacturing sector, you're seeing a lot of action starting there. It reminds me of the telecom sector back in the late 90s. There's huge growth both in India and for exports. So this is the early part of the runway that you're kind of at, and we're still ready to see the sector take off, which will take another 2 to 3 years. So electronic manufacturing sector is something that I would obviously be long-term invested in. Hospitality, airlines, travel, we all want experiences, and I'm hearing about the prices people want to pay in Jaipur and Goa, and people are doing it. And you try and book a a wedding venue, it's just not happening for you. So this is a trend which I don't think is going away, and I think the government is putting a lot more emphasis on tourism, and foreign tourists are still to pick up from the pre-COVID level. So that's the extra kind of cream on top of the cake for the industry if they can start attracting more tourists, which I believe they will be over the next 2 to 3 years. So those are two longer-term themes. The other theme I like is premiumization in the beverage industry, and I think that will continue. Given the younger people that we have in this country wanting to not just do the traditional way of drinking, but obviously have their own views on what they want to drink and how they want and where they want to drink.
Sure, Andrew. With that, would like to thank you for coming on our show and sharing your thoughts with us. Of course, I would also like to say cheers to you, because we have Christmas coming up next week, and then we have the New Year's on 31st as well. So hope you have a great experience, and would like to raise a toast to you, and look forward to more interactions in the new year as well.
Me too, Nandita, and wish you and the team there and all of you a very happy Christmas and a great and prosperous 2025.
Thank you, Andrew. Wish you the same. Thanks a lot.
Thank you.
Well, with that, of course, let's shift focus to the market, because we have come off opening lows. In fact, we have managed to edge back into the green. Look at the Nifty, up 40 points now, making its way towards that 24,400 mark. So the bulls are fighting back. The Sensex is up over 100 points, and the Nifty Bank Index is also, it has also managed to pare some of its losses. It's now around that 52,700 mark. The mid-cap index, although, is still trading in the red. But yes, it is a good fight back. We are attempting a fight back, and 24,350, that's back on the charts. Let's see whether or not we manage to build on this recovery or not. But with that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. It's a goodbye from me. Just a few minutes from now, we'll have 3 new listings on the Lal Street. Let's see how that pans out. With that, thank you and have a great day.